Kodak has been in the news a lot recently after it was awarded a $765 million contract from the Trump administration to develop generic drug ingredients. The deal was worth more than Kodak's entire market cap at the time, and as a result, Kodak's stock shot up 1,400%. But shortly after the announcement of the deal, questionable insider trading activities have spurred the SEC to launch an investigation and put the entire deal in doubt. The whole situation is complicated and bizarre, but to fully understand the significance of this generic drug deal, we must first understand the history of Kodak and how it got to where it is today. You probably know Kodak as the maker of the iconic Kodak film cameras. In the 50s and 60s, before digital cameras, this was a big business and Kodak dominated it. In 1976, they had 90% share of US film sales and 85% share of US camera sales. They milked their monopoly position by employing an extremely profitable razor blade sales model. That is, they sell an inexpensive camera at a break-even profit or even a loss, but they then make a killing selling the film required to operate the camera, which costs almost nothing to produce. In the late 60s through the 80s, Kodak was at the top of the world. It was extremely profitable and was one of America's largest companies, earning itself a place on the prestigious Dow Jones Industrial Index, which tracks the 30 most important companies on the US stock market. But their success beckoned complacency. Because their existing business model of selling film was so successful, they didn't think of trying anything else. Top executives at Kodak thought their brand was strong enough that consumers would never leave them, and they could just coast along selling film, never having to innovate or change. Up until the 1980s, Kodak seemed to be an invincible industrial giant. Enter Fujifilm. In the 1980s, the Japanese filmmaker aggressively entered the US market. Their cameras and film were much cheaper than Kodak's, but Kodak wasn't worried initially. They had been the dominant player in the US film industry for so long, they thought their brand was invincible. Why would anyone buy a cheap Japanese knockoff camera, right? But what Kodak failed to consider was Fujifilm wasn't just pricing their products cheaply, they were also marketing aggressively. They spent heavily on advertising, even sponsoring the 1984 Olympics held in LA. The combination of a cheaper product that was of similar quality and the aggressive marketing allowed Fujifilm to attack Kodak's monopoly position and start taking share. Fujifilm went from 10% market share in 1990 to 17% market share in 1997. Kodak was still the dominant player, but they lost their monopoly status. But starting in the late 1990s, a new competitor entered the market that was far more powerful than Fujifilm. The new competitor was the digital camera. The digital camera would make film cameras obsolete, threatening Kodak's main revenue stream. And the threat of digital cameras, funnily enough, came from Kodak itself. In 1975, Kodak engineers developed the first ever digital camera. The benefits of digital over film are immense to the consumer. The digital camera saves images digitally, so it is not necessary to get the picture developed from film. But the problem for Kodak is there is no razor blade sales model with a digital camera. Once this consumer buys the digital camera, that's it. So even if the digital camera is more expensive, the lifetime value of the customer is much higher for film because they have to keep coming back to buy more film. For example, if the film camera costs $40 and the consumer pays $10 per year over the next 10 years, that is a total of $140 spent. On the other hand, if the consumer bought a digital camera for $70, that is all Kodak gets from the sale. So even though the camera costs $30 more, Kodak's revenue is 50% less than it would be for a film camera. Because of this, they tabled the idea of the digital camera so they could maintain their film business. But what they failed to consider is they are not the only company capable of making a digital camera. Competitors like Fujifilm and Nikon developed digital cameras after Kodak tabled its design. By the 1990s, digital cameras had become mainstream enough that it was starting to take share from Kodak's film business. And what's even worse is the digital camera sales were going to Kodak's competitors. At that point, Kodak finally realized film would die and they shifted to digital cameras, but it was too late. Their competitors were already ahead of them and they had no hope of dominating the market like they did for the film business. It is really a shame because had they bitten the bullet and started pushing the digital camera in 1975, they could very well have been the market leader in digital. Moving on to the 2000s. Kodak's film business was declining rapidly and they failed to establish themselves as a major player in digital cameras. They realized that if they wanted to survive, they would have to enter a new business. And in 2011, CEO Antonio Perez shifted the company's focus to the printer business. They made commercial printers used by companies to print out leaflets and junk mail. They also made small consumer printers. While this business was better than the film business, It faced stiff competition from incumbents like HP and failed to offset the decline of the film business, resulting in revenue decline every single year from 2004 to 2019. Kodak's declining revenue and profitability caused it to be kicked off the Dow Jones Industrial Index in 2004 and ultimately filed for bankruptcy in 2011. After a lengthy bankruptcy process, it was able to re-emerge in 2013, but it struggled to maintain profitability and has dramatically downsized, being only a shadow of its former self, with 2019 revenue being less than 1/10 of what it was in 2004. So Kodak was a dying company whose stock had fallen to the low single digits, looking like it's on its way to zero. But in August of 2020, out of nowhere, the Trump administration awarded Kodak a $765 million loan as part of the Defense Production Act to develop generic drug ingredients to reduce the US's reliance on foreign suppliers. The deal would be transformative for the company. The loan size was over 3 times Kodak's market cap and would allow it to enter a new industry with the full support of the US government. As a result, Kodak's stock skyrocketed 1,400% in the next 2 days after the deal was announced. But within a couple weeks of the announcement, some controversies were exposed. Lawmakers on Capitol Hill were suspicious of how Kodak was awarded the deal when it had no experience in the pharmaceutical industry. Also, the day before the deal was announced, Kodak's executive chairman, James Continenza, was awarded options to purchase 1.75 million shares of Kodak. This perfectly timed stock option award would benefit Continenza to the tunes of tens of millions of dollars as the stock skyrocketed from $2 to $60 in the next couple days. This suspicious insider transaction raised alarm bells with the SEC, who is now investigating Kodak, and as a result, the Development Finance Commission put the deal on hold pending the outcome of the investigation. It's very possible that the deal is scrapped and awarded to a different company in light of this scandal, and Kodak will wither away on its existing trajectory to zero. The only thing we know for sure is that a lot of investors got burned buying the stock on the news of this deal that may never end up going through. After the announcement of the deal, over 100,000 Robinhood users bought into Kodak stock, and it has since declined 80% from the highs. That wraps it up for this video. Don't forget to like, subscribe, share this video, and leave what company you'd like me to cover next in the comments below.